persons to have a New Zealand bank account in order to apply for an IRD number. In part, this was to ensure that the anti-money laundering identity verification requirements that New Zealand has signed up to apply to offshore persons. And I'm sure everyone in the House would agree that New Zealand, being party to all of the anti-money laundering requirements that have been internationally agreed, is important, because we don't want to see New Zealand out there as an outlier in the world in terms of providing good standards of probity in our taxation and financial arrangements. That would be a terrible thing, Mr Chair, and one that on this side of the House we don't think should have any place whatsoever in the way New Zealand presents itself to the world. However, when that piece of legislation was passed, it became clear, or after it was passed, it became clear that some of the compliance costs involved in everybody getting a bank account in order to get an IRD number were a little high, and officials went away and came up with some solutions. Some of them are non-legislative and are not covered in here, but they were described to the committee in some detail. However, some of them are legislative, and they are the ones contained in Clause 71. And in particular, there was one that was a pretty obvious one, which was around seasonal workers employed under the recognised seasonal employment scheme, which clearly would be quite difficult in some instances to immediately get bank accounts. Things like identification and all of those sorts of things are a little hard at times to get. So non-resident seasonal workers under the RSE scheme are going to be allowed a grace period of 1 month after arriving to get a New Zealand bank account and inform the IRD before the higher withholding tax would apply. All members of the Select Committee supported this as being a practical way of dealing with that. The other category of people is a person who had already had anti-money laundering verification undertaken by a New Zealand reporting entity and would not need to obtain a bank account to avoid duplication of that process. And so in law, Mr Chair, what that equates to is a person for whom a reporting entity under the Anti-Money Laundering and Counterfeiting Financing of Terrorism Act has conducted the customer due diligence procedures required for customer due diligence under this Act. There was some questions asked at the committee as to exactly whether that would provide exactly the same level of assurance that somebody had a bank account, but apparently it is a consideration within all of the provisions of that Act 2009 Act I mentioned, and therefore those people are exempted as well. And then the bill already exempts non-resident suppliers of remote services from the requirement to have a bank account. The committee has recommended that other non-resident suppliers also be exempt as long as the IRD number was being supplied solely because they were a non-resident supplier of services. So this all came about because the government, well, it's amazing that I know all of that, isn't it? No, well, the thing is they supplied it, but the only reason a non-resident supplier would supply that would be because they were a supplier of remote services to New Zealand, because otherwise they won't have a New Zealand bank account. There's no reason for them to have a New Zealand bank account. They're not an entity operating in New Zealand. I know, it is. Well, and Alistair Scott could potentially have taken a very similar call to me had he chosen to do so. He hasn't, and I'm sure he's grateful that we've now traversed that material. But it is sad to me, Mr Chair. It'll only be brief. Thank you, Mr Chair. It'll only be a brief.
Don't apologise. Just get on
to that statement, which is really just to say to sum up my contribution here. So I think this Clause 71 is useful, but it does highlight the shortcomings with the way the government's gone about this. And we are nearly at the end of the committee stages of the third bill of three. And it's a pretty poor trifecta, if you ask me, Mr Chair, because in those three bills, the government has set up the bright line test that hasn't really worked. It's created a series of obligations it's had to come back to the House and correct. And in the end, New Zealanders, I don't think, are particularly better off for these changes. We're supporting them because they're minute steps in the right direction, but actually the government, when it looks back on how it's gone about these three pieces of legislation, will probably want to have a pretty serious rethink about whether they've got it right. We don't think they have in terms of the issues that are meant to be being managed by the Bright Line test. But on top of that, that if you're making law and then correcting it months later, there is a problem with how that law has been made, and we need to do better than that.
Chair.